stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Time for us to deliver a couple of more top stock picks for this particular week, December the 12th of 2016. Here to do that for us, Eric Dutram, Nina Mishra. They each have a very interesting stock with some interesting characteristics. Eric, we'll start with you. Diamondback Energy. It's in the oil and gas space. Now, there's been a lot of volatility in oil prices lately, but this still looks good, huh?
Yeah, there's been a lot of volatility, but lately it's all been to the upside.
Yeah.
Thanks to that new deal with OPEC, and now just today on December 12th, we saw that some of the non-OPEC members who are also big exporters of oil, namely Oman, Mexico, and Kazakhstan, they're all joining in on this cut as well. So oil prices are really surging here. It seems like this might actually happen, and they might actually cut production, which is great news for anyone in the energy sector. Companies like FANG, they operate in Texas and the Permian Basin area, so it's going to be really great for them. And if we look at some of their stats, we can see that some of their numbers were already pretty impressive even before this oil cut.
Okay.
As we can see, we got 14 analysts tracking this stock right now, and in the last 2 months, 14 estimates have gone higher for the full year estimate, and we see a pretty similar number for the next year estimate, where 16 estimates have gone higher and 0 lower. And not just the number of estimates, but the magnitude of those estimates has also been really strong. If we look once again to the chart here, we can see that the full year estimate has surged by about 30% in just the past 2 months. Meanwhile, the next year estimate has gone up by about 22%. So some really strong numbers for FANG here. And then also, if we look back again, some of the company's presentation materials back in November, once again before we saw this big oil surge, we can see that the company actually has a operating expense that is far lower than its peers, just under $10 for every barrel of oil equivalent, and then cash margins are expected to be about $32 in 2017. So it was already reducing costs, it was already seeing increased margins, and then you add in higher oil prices as well, and no wonder this is a top-ranked stock and why it could be a good pick for investors here in the near term and going into 2017 as well.
All right, sounds good. Nina, you are going to take a look at Applied Materials.
Yes. So they are equipment suppliers to the global semiconductor industry, and their equipment is used for semiconductors and LCD panels as well as solar PV cells. And if you look at their earnings, EPS surprise chart, it looks pretty impressive. They have missed only once in last 5 years. Their recent quarter results were also pretty impressive. And although they missed slightly on the revenues front, they raised their guidance and they beat on the earnings front as well. And you can see that analysts have been pretty bullish on the stock. Estimates for the current and next year have gone up substantially after the results, so that is good. And one thing I wanted to mention about this company, that they have very successfully diversified their businesses over the past few years. So it is no longer PC demand driven, because PC demand has been slowing down. And one new area of growth is the equipment which is used for organic light emitting displays, or OLED displays. So there was a report in the journal which says that these OLED displays are going to be used by Apple in their next iPhone, and they are placing the order with Samsung Electronics. Now this is going to be huge for this company, Applied Materials, because they are already a key supplier to Samsung's chip fabrication business. And it is reported that these OLED displays are much better than traditional LCD displays. The stock has done really well this year, but despite this performance, you see that it is still attractively priced. It's trading at about 13 times forward earnings, which is really great. And chips have been hot this year. Even after election, chip industry within the broader tech has done pretty well, while some other tech names haven't done so well. So it's top 2% industry rank and top 13% sector rank. So that looks pretty good. And given its attractive valuation and growth potential, the stock has a value score of B and growth style score of A and a VGM score of A. So I think it is worth a look.
Okay. Do either of you own these stocks?
Do not.
No.
Okay, thanks for that. Don't forget, you can find out more information on each of these companies as well as others on our website, Zacks.com. Get on over if you're not there already watching this video, and just go through the home page as your starting point, and there's where you'll find a lot of other information you can link to in Zacks.com. With Eric and Nina, I'm Terry Ruffalo.